Jerry Dale brought his crystal ball again and will comment about the soybeans at $17 a bushel, and yet his forecast for the report coming up right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So Jerry, how are you today? You anticipated about the price of soybeans reaching $17 a bushel last week. Do you think that's going to last?
Well, it is up. I think that in general, the corn and soybean markets are going to kind of hang in here going forward until we actually see what these USDA's reports happen to be on June 30th. We did have a little bit of a setback in profit taking here after the USDA's numbers of last week when the stocks reports, or excuse me, the exports on beans weren't increased as high as I was looking for, or the fact that the stock numbers for soybeans didn't dip below 200 million. But the other part of the equation will be what happens on June 30th on acreages at this point. We did have some interesting twists out here. The general attitude has been that we'd probably see a smaller U.S. corn plantings because of the weather we've had through the first 2/3 of May, and that would end up slicing some of the acreages in the northern plains on corn, and maybe switching over to beans or switching over to prevent plant. But a noted grain and livestock consultancy under the old name of Informa. They've had a couple different adjustments, so I'm still in that whole world. They thought that maybe the corn number would be up 1.5 million and beans would be down 2 million, which did prompt a little bit of head scratching from people around the industry this week. But I think the focus is still going to be on the weather in the U.S., which was very warm this last week in the central U.S., and also in that upcoming report.
Yes, and how much do you think the US weather is impacting prices these days?
Well, I think to some extent the weather is a very important factor, but I think the one twist of it here is that the first stage of this warmer weather does end up kind of help rebound some of the growth factor in here. We didn't get this crop planted on time. It really didn't pick up steam until maybe 3 weeks ago or so, or a little over that, and so that the development of the crop is behind, and so that's warmer weather does help prompt some growth where you have moisture. Now, some places are starting to be noted out there from various places around. Well, from Denver to Columbus, Ohio, is still a long stretch of ground in there, and so there's still a lot of spots in here that didn't get a tremendous amount of drink here, but it's a factor that's there. But the interesting thing is that I think there was also some influences during the week here of people that had investments both in the stock market in the U.S. and then also in the commodity funds, and we did have some definite pressure here in some liquidation from some of the commodity funds that basically looked at the situation and said, well, the stock market's weak, and I think I'll take some profits off the situations there in the commodity funds. And that also kind of added to some of the post USDA report from last Thursday.
Yes, and how does that scenario with higher interest rates is affecting the farm economy?
Well, it's not a quick direct situation on it. The biggest factor that it has is on land purchases, and that where, of course, the interest rates for buying, you know, mortgage for a house or a mortgage for a piece of land is a factor there. To some extent, the impact on a producer situation directly is somewhat modest, relatively speaking, because the one thing that has happened over the last 10 years, and there was a big buildup on credit and that, back from 2012 to 2015, and that's got paid off over the last few years. So it's not like there's basically your production loans, which people go out and do from banks. That's kind of lightened up over the years. But the twist of it is that higher interest rates in general have an impact on our food demand. If the higher prices and that people shift down the selections from beefsteak to chicken, or from various things at the grocery store down to the lower prices and that. So that does shift down some of your meat demand and other things out there, which it's a slow process, but it does have an impact with higher interest charges out there. Combination of just mentioned the investor side of the thing, and also from the pure demand for U.S. food demand.
Yes, and let's talk about the Brazilian crop. We always have the same discussion when Connect releases the first projections, projecting a record crop, a lot higher than the previous year, and then things get adjusted, and then a lot of people start to project the worst crop ever, but things are almost the same every year. Don't you agree?
Oh, I think the South American outlook is always very, very positive, except the one, particularly Brazil here now. I think you're kind of pointing towards the corn number here for the coming year, over 145 million metric tons versus this year's 125 or 126, and that the situation, the optimism. Excuse me, that's the soybean number. The corn number is also optimistic, from the 115, 116 number up to the high 120s. But exactly right. But the interesting twist on it here, I think you're well aware of. We talked about this last week about the wheat situation in Argentina, and they're not as optimistic about what they're going to see in Argentina because of the dryness that has occurred over the last. Let's say the last fully a month, and probably more likely 2 months down there. And I think that subtly is going to have an impact on the last corn output, but that hasn't really come about at this point. But the other thing we got to look at is that the other component of the USDA's report on June 30th is the stocks reports. They sometimes have some interesting quirks in them every once in a while.
Yes, and what are you expecting for the report on June 30th?
Well, the June 30th stocks reports on the corn side of things, we're going to start to show again a very, very strong ethanol demand. It looks like to me that that's going to be the highest one we've had since the 2018, on nearly 1.76 billion bushels on that one. Corn exports are going to show a very impressive spring number here of over 800 million bushels, and that it's going to be down from last year, but last year was extremely high with the Chinese taking a huge amount of corn there to fill in for a problem they had 2 years ago on things. From there, the overall number, interestingly enough, is likely to go up from last year, but last year was the lowest we've had in like 7 years. And then this year's number, at a number closer to, 4.42 billion number, is still going to be the the lowest number since 2013 to 14. So we're going to bounce back a little bit from last year's stocks number, but it's still going to be extremely small versus the last, well, I guess 5 or 6 years. So to some extent, there shouldn't be any. Oh well, we're so much higher than last year. Woe is me, because the fact that we're dealing with extremely small numbers there, or reduced numbers versus the normal numbers we've had over well, in this case, it sounds like for over 6 years or more, so 8 years actually since 2014. On the corn side, beans, similar situation there from the standpoint of the demand levels. Actually, soybean crush has been running a very, very impressive performance here, and that actually it's kind of the same levels we've had for the even last winter, which is kind of unusual. You tend to seasonally slow down a little bit as we get more competition from South America, but the crop condition and the size of the crop in Argentina has been reduced because of this hot weather that was there during late December through early February. And so their crop size was dinged. And so in that case, the competition, because Argentina is the South American soybean meal and oil producer down there. They do a tremendous amount of part of their soybean crop is put out as products and not as beans. And Brazil is doing the same thing, but in general, it's still the competition from there. The interesting twist on exports going forward, as we mentioned here, the export push that we have this summer is going to make things quite interesting. The USDA continues to be cautious, and there's some reason to be that. This is the amount of beans that have to be pushed out of here. It could be near record levels for the summertime. But if some of the competition, as you just mentioned, Argentina, and then to some extent the Brazilian crop was not as strong as anticipated. So by the time we get into early August, there could be a hole out there that the U.S. could be filling with expanded U.S. exports. The interesting thing about it is that, though, on the stock side of things, we are going to have a number that's going to be up about 1 billion bushels versus 770 million that we had last year, and that was extremely low level because of our impact of less acreages, and also the yield situation on 2 years ago's yield was down closer to 50 bushels and not the 51 and a half, 52 that we've been recently having. And it's interestingly enough that still with this 1 billion stocks level, we're going to still be at a level that's about 4 years. It's higher than last year, but it's also lower than the 3 previous years. So it's a situation where U.S. stocks out there are, they bounce back from last year, but they are still not robust anywhere close to what we had during the COVID years and things of that nature. So the market's going to be well attuned to the weather that's out ahead of us at this point.
All right, and next week we have a short week again.
Yes, yes. Well, we have a new U.S. National holiday to note the last of the Civil War Black and African Americans being freed in Texas, and that it's going to be an interesting situation. The weather's going to heat right back up Monday, Tuesday, and Wednesday here in Chicago. We're going to be pushing 90 to 95 again. We had a couple hundreds this last week. Now, as they say, well, wow, that's less than last week. But the cumulative effect of this situation, and I was checking with a couple different weather people here, and there's not too much rain in a lot of people's forecasts for all of next week. There'll be some rains fly around through northern plains and through Minnesota, and maybe a few pop-ups every once in a while. but it looks like it's going to be in the high 80s to the mid 90s for much of the central US. And that's going to really start to have an impact on things as we go forward, particularly if you be in those areas that missed some of the rains that we've had over the last 2 or 3 weeks. And so I think that's going to be another feature out there. I can't say that we're in the depths of a big time drought, but you get to a drought because you don't have any rain in the short term. So I think the market's going to be well aware of that, and we'll see what happens. I kind of feel like that the big month for corn is always July and what happens in that month. And in retrospect, in the other side of the coin, soybeans, it's the August month for weather there. And so I think really this is going to be a highly important situation, considering that this year's general weather situation is still a La Nina, and there's a lot of potential there for some adverse output if the cases start to point to the worst case at this point.
All right, we'll wait and see.
You bet. Nice to talk again with Louis and Luis. I'm sorry, and we'll take another look at it here a week from today.